Here's what you should be watching for. First of all, guidance on Azure cloud growth. Given all this economic uncertainty we're talking about, we might see Microsoft work with customers like they did back in 2022 to save cloud computing costs. That, of course, hurts the growth rate of Azure. And then there's CapEx. We just heard Meta is raising its AI CapEx for the year, and we know Microsoft has been pulling back in recent months. So we'll be paying attention to CFO Amy Hood's guidance on what CapEx will look like in the fiscal year, which beyond the fiscal year, rather, that ends in June, Melissa.
All right, Steve, thanks. Keep us posted. That call again. 28 minutes time. We'll get underway. Looks good right now. Things could change dramatically in a half an hour when that call starts, when we get that guidance. Guy, what do you make of the
As
quarter?
it often does. But, I mean, I think people, a collective sigh of relief. Azure growth, half of the growth is AI. Good for them. This level now, 419, 420, gets us back to where we sort of fell off the cliff from back on February 20th or so. But back of the envelope, you do all the math, and yes, it's a nice little move off that recent low we saw a couple weeks ago. You know, you still have a company, just regardless of what they say, trading close to 29 times next year's numbers, which is cheaper than it's been, but expensive historically.
You know, it's interesting. When Google reported on Thursday afternoon, there were things that you could pick at a little bit. But, you know, the stock was trading higher, 5% in the aftermarket. I think a lot of that had to do probably with low expectations here. I think you could say the same thing for Microsoft. I think that everyone's focused on that Azure growth. Again, let's see what the guidance is. I'd also mention that, you know, a lot of the story leading up to the CoreWeave IPO, I want to say last month or so, was that Microsoft was canceling some data center leases. Yep. I wonder if they were moving some workloads, you know what I mean? Or they basically had more capacity on Azure for that 50% of their business that is AI. So that could be really interesting. I guess the most important thing on the Q&A is, like, what sort of uptake are they getting for their, like, AI agents, for Copilot and the like that they're putting out there? Because that's a really important part of it as you think about this story broadening out. So, again, I don't think there's anything to kind of knock right now.
I think it's so right where Dan left off. There's nothing to knock right now. This sort of gives a soothing sense to the overall market that it's not as bad as we thought. Whether the spend is still there. Meta, we're going to hear about ad spend. The price target on Microsoft, the consensus price target is, I think, $495. So we've got about 20% more to the upside there. If they continue to spend, the market's okay. Market is 40% made up of the large cap tech names. So I'm most interested. We heard that they were cutting back on data centers. Data centers was 88% of NVIDIA's revenue last year. Are they doing it for real? And how much impact is going to be on NVIDIA? Most important thing, could you see NVIDIA's stock move down? As I've been thinking, NVIDIA's been blessed with the overall rally in the market. It's dipped off that $90 basically support level. But there is a thesis where NVIDIA could make less money and the others make more money. And I don't think anyone's priced that in. Okay. Where the market's still okay, but NVIDIA suffers, gets pulled out.
You're reading through. And the other read-through will be probably coming on the conference call, any sort of commentary on enterprise. You know, right? I mean,
what's good? Well, are you talking about, Dynamics 365, which is their ERP, which competes with the Salesforce and Oracle? That was a nice beat. And if you look, Salesforce is up nicely in the aftermarket. So, you know, we talked about with Alphabet, was it better than feared? This was dramatically, I thought, better than feared. Yeah. Yeah. And so, you know, that Azure growth we talked about, that was significantly better than feared, I think.
Yeah, I mean, that was what bombed the stock in the last earnings report. I mean, the bulls would have said going into this report, into the Microsoft report, that it was very much de-risked in terms of the story because of that decline from that quarter in terms of Azure. The bar was much lower in terms of expectations.